The thing to keep in mind more than anything right now is
Okay.
that they're panicking, they being the banks. They're trading over 350 million ounces of paper daily to suppress the price, Jared. The next couple of days, I think, is exactly why. If it got away from them, you're talking blowing up some of the biggest banks in the world now. Well, as far as gold is concerned, and as far as silver is concerned, I think that there's a high probability that what we've seen really, as far as I'm concerned, since June 12th, with gold down about $100 and silver down about $1, is not a reaction. It's a strategy. It's a
Okay.
strategy that is implemented in the form of a methodical decline. And that decline started Sunday night. It hasn't stopped. This is being done by the bullion banks who want you to believe the narrative that it has to do with, the ceasefire and moving from, risk off back to risk on. This is price suppression, period. And I say that to you for the biggest reason is that tomorrow is option expiration on COMEX. And Friday pushes the front end month, July, silver contracts into delivery. So there's a lot at stake, the end of month, the expiration, and the July silver contracts which go off the board. You have the second largest short position by the banks in silver in the history of the COMEX market. So, in fact, I said this on a couple of podcasts that I expected there to be a pullback into the weekend as a result of this. My guess is Monday you would see things move the other direction, perhaps Tuesday, simply because you have this big deal happening on Monday. So with the end of the month contracts moving off the board and first day of notice for the July contract. But look, as far as what's happening, people, I think, are too reactionary. They think too much in the moment. The bigger picture was looking very positive for gold and silver long before this 12-day war that we've now seen in Israel and Iran. So, I think it's has less to do with geopolitical events and more to do with commercial bank positioning right now on COMEX, and they have to push it down right now because of this massive short position. If not, you're talking existential threat to the survival of some of these banks who have this massive, massive, massive short position. So I expect it to be short-lived and then resume its upward trajectory the way it had been going for the past several weeks now. I think they're
Do you have
doing it
any?
in gold already. They're
Okay.
beginning to mitigate in gold. It's like they're losing control. But they want you to believe that this is a safe haven unwind. That the only reason that they've gotten this high is because of the
Got it.
tensions in the Middle East. And they forget that it had been going that high long before this. But yeah, I think in general what you're witnessing is maybe the realization by some of these banks that being short and having to use this much ammunition to hold down the prices is silly. Since Trump was elected, Jared, there's been over almost 820 tons with a T of gold have stood for delivery, and almost 9,000 tons of silver.
Yeah, that's a
This
lot.
surge of deliveries into COMEX warehouses is crazy. And this is long before we've seen any problems with what's happening here in the Middle East. So at some point, when we see such physical demand, not just on COMEX, but in the LBMA and all around the world, I think continuing to be naked short is very silly. So I would like to think that we're getting closer to that because it seems like we've already crossed that line with gold where they're really not trying to knock it down quite the same way that they did. Now people look at gold, what's it down today? Let me take a look. You look at gold today and it's down 45 bucks. It sounds like a
Yeah.
lot, but it's a 1.5%. That's nothing. It's just that as the prices go higher, percentages seem bigger for sure. But yeah, I think that ultimately all manipulations end poorly, and I think this one will be no different as far as I'm concerned. So stay the course. The physical demand is overwhelming. The ability of these banks to easily suppress the price to the point where they have to have the second largest concentrated short position by the commercial banks in the history of the exchange for the July delivery. That tells you that we're getting, I think, to an environment where being naked short like this is really probably not worth the setup probably isn't worth the return when you talk about potential fallout. But yeah, I do think that the BRICS are a threat that people are underestimating right now, and what it would see. Everyone talked about the fact that they were too small of a group, even though they represented nearly half of the world population, 40–50% of global GDP, three of the four largest nuclear arsenals, all the commodities, the manufacturing, the rare earths. Everyone said, well, that it's just they can't compete with the dollar in terms of settlement. But when you open up this new bridge network to all of the non-BRICS nations, including the Belt Road, the Eurasian Economic Union, the Shanghai Cooperation Organization, and the BRICS, you're talking the majority of human population and all of the things that go along with it. So that is something that no one really thought of. And if that were to be, in fact, that is the stated goal of the meeting in Brazil, is to find alternative settlement and payment systems outside the dollar to reduce dependence on the dollar. Well, if you're opening it up to all non-BRICS nations and the alignment that they have with the Belt Road in particular, which is 75% of human population in and of itself, 50% of global GDP, add that to the BRICS, the Belt Road, and all of these countries are closely aligned with China. It doesn't mean they're in the BRICS, but they're aligned. You get countries like Vietnam who have officially applied. You get Indonesia who has officially been admitted. These are countries that are resource rich and are, I think, breaking away slowly. So the slowness of it represents that this is a very big deal, and President Trump is certainly showing you don't want to be on the wrong side of the U.S. agenda. And so I think these countries are trying the best they can to align themselves in a way that allows them to break free, but not until all the I's are dotted and T's are checked. So when that all at once moment is, Jared, I have no idea, brother, but I do think it's coming to a degree that I think it would be nearly impossible to expect the dollar to retain its level of prestige and its level of accumulation and or just its place in the natural order of things as the world reserve. It is if you hold all of your assets in dollars, you're destined to go broke, period. And I think that's really where we're at this stage of the cycle. So yes, it's coming. When? I don't know. And I think it's kind of silly to try and figure it out just to simply say, until it does, we still have time to protect ourselves. And don't look at whether it be Bitcoin or gold or silver or XRP or whatever asset you are accumulating. You're not doing it to become wealthy. You're doing it because these things represent wealth in a system that seems to be going by the wayside. It's kind of the way I look at it. Well, I think right now the real value is found in silver and in platinum, and that's where there's been more demand recently than there has in gold, simply because gold has moved up so fast and silver and platinum had lagged behind from a standpoint of historical standpoint. Both in relation to gold represent an unbelievable value. So we've seen a lot of purchases of platinum. We've seen a lot of purchases of silver. So yeah, I think that in general, the public, Jay, is out of really, not really part of this rally. The rally has been by sophisticated investors, central banks and commercial banks and sovereign wealth funds that have been pushing the price higher. And even in that environment where you're seeing, it's interesting because you're seeing the institutional investors sell every single week since February equities and dumping at a level at the last 4 weeks have averaged $2 billion per week. the insiders selling equities. At the same time, mom and pop retail investors have a larger allocation to equities than ever before, even greater than the dot-com bubble at like 53%. So what could possibly go wrong there? And then at the same time, you have it inverted on commodities. You have the biggest money in the world, those that are the most sophisticated, standing for delivery to the point where we're seeing the largest delivery in the history of the COMEX market in both gold and silver on the May contract. And we'll see what those numbers look like here on Friday. But again, you got quarter end on Monday, you got options expiration, and you got these silver contracts going off the board. It's going to be an interesting few days. I would suspect there to be probably even a little bit more weakness heading into the end of the year. But the public is missing this, and that's been done maybe by design, certainly, through volatility, through rhetoric, through lack of anything positive to be reported on gold and silver. So for those that have been buying, we've been recommending to them to buy silver and to buy platinum because you don't get values like that very often. They're generational values when you compare them on a historical precedent to their relationship with gold, to their relationship historically. So yeah, there's been some gold buying, but mostly it's been silver, and then second would be platinum. It's interesting because platinum had been forgotten for the last, I don't know how many years, for a long time. We didn't sell much at all. Now there's a huge demand for it. The U.S. Mint, to the best of my knowledge, hasn't made a platinum eagle in a couple of years. They make some proof coins, but nothing commercial strike. I don't believe they're doing any this year or next year. Yeah, and they're not doing any this year, and to my knowledge, they haven't said they're going to do any in 26. So you have platinum eagles as rare as hen's teeth. You have, maples and Britannias and the Krugerrands or Philharmonics. I mean, these are coins that you get up one shot at them and that's it. They're gone. They're really hard to come by. There are bars that you can get. So just as platinum is representing such an amazing value, getting the product has become more challenging. But we do have some bars and do have some coins available, but big premiums in relation, I think, to where they should be. Silver, on the other hand, across the board represents, in my opinion, value of a generation. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world. And why I say sophisticated is because the amount of deliveries coming off of COMEX is record-breaking. It's groundbreaking. And it's not an easy thing to do. These are people that are very connected, they're very smart, and when they're pulling off as much metal off of the exchange as they've been doing, where are they moving it to? And who's taking possession of it? And these are things that I think people need to think about. Who's got the ability to stand for delivery to that degree in gold and silver, silver in particular? The public, I think, Jared, is missing this largely, but those that have been buying have been focusing on silver or platinum. And it's a wise thing to do, arguably, at these rates. It would have been even smarter recently when the ratio was a little bit higher. But anytime you're north of roughly 80 to 1, you want to be in silver. Anytime you're somewhere in the neighborhood of 50 to 1 or lower, arguably you want to be in gold. So yeah, if you were to trade your gold right now at a ratio of, what do we got? Roughly.
Yeah, I'm showing 92, 60, 69 today.
Right. So at a ratio of 92, once it gets to 40, 45 to 1 or whatnot, you switch back. Well, 45 to 1 would represent roughly the 200-year average of the price, last 200 years. That's roughly the average of the price or the ratio between gold and silver. And then at the same time, it's still coming out of the ground 6 times lower than that. So when you talk about a generational value, it is, and has been for a while. That it exemplifies the statement that the markets can stay irrational longer than we can stay solvent. But yeah, it is the trade that I think people should think of. And the
So,
thing to keep in mind more than anything right now is
okay.
that they're panicking, they being the banks. They're trading over 350 million ounces of paper daily to suppress the price, Jared. And last I looked, somewhere around 960 million ounce short interest. You want to talk about the potential for a short squeeze? That's why you could have all but guaranteed the price was going to come down here leading into the end of the weekend because of the options expiration, the end of the quarter, where the LBMA and then the COMEX, these are important end of quarter numbers, and then of course the July contract rolls off the board on Monday, first day of delivery, and so all of these options, all of these derivatives, they're trying to keep the price down so that they finish out of the money, and then typically the way this works is that Monday afternoon, bang, it goes right back up.
Yeah.
This is just the same bullshit they've been doing for a long time. But one of these days, they get caught with their pants down, the way the Bear Stearns did, which was largely why they went out of business, because they were on the wrong side of this. And so, while we're really doing by playing this suppression game is playing right into the hands of the countries that are standing for delivery and the big players standing for delivery at subsidized prices. Eric Young, King Kong on Twitter says that the Chinese are part of this now too, because they know exactly what we've been doing, and they're like, fine, we'll beat you at your own game. We'll play the paper price, we'll suppress the price, and then we'll stand for delivery as well at stupid subsidized prices. So I truly believe we're coming to the end of this game, and the desperation that they had to use here at the second largest concentrate short position ever on COMEX in silver is evidence of that. So yeah, it's a good time to be switching to silver, because all of these shenanigans that we're seeing and the shortness of availability is on the COMEX and the LBMA, where it's 8-week delivery delay. On LBMA, it's supposed to be 1 day. At some point, that has to spill over into the retail market. It hasn't happened yet, but it can happen very quickly with one spark, one event, one anything. And I have often also told people that it's been my experience going all the way back to Desert Storm. I mean, I've been doing this for 35 years, and anytime there is a conflict that has arisen where we would expect the price to shoot up and the price of stocks to crash, it does the opposite at first. It's crowd control. My friend Jim Sinclair, God rest his soul, used to call it MOPE, M-O-P-E, Management of Perception Economics, where it's all about managing perception. And it's easy to do with levered contracts. They don't want people thinking, oh shit, the sky's falling, sell dollars, sell equities, buy gold and silver. That's the last thing they want when they have these large short positions, which are being used to perpetuate the illusion of strength of currency, strength of bond market, et cetera. It's a game that we're losing at. It's a game that is for the very first time in all of these years, I believe, is coming to an end. Now, when and what does that look like, I don't know. But the level of effort that is being used to keep this game going is exceedingly interesting. And then you look at gold, and it just seems to me that gold has broken free from this and seems like it's being controlled more by the Chinese and other markets than it is by the COMEX. So only time will tell. But silver is still within the grips of the bankers, and although a very dangerous game, I would say, that they are playing. And the next couple of days, I think, is exactly why. If it got away from them, you're talking blowing up some of the biggest banks in the world. Now, I doubt it will get away from them here yet, but we're getting to that point where the deliveries are very easily overwhelming the availability of what is on the exchanges or what can quickly be delivered. Look at the LBMA. Sorry, guys, you're supposed to get your bars in 3 days. We're 8 weeks because we have a shortage of trucks and manpower. That's not true. It's that they've got caught and they're scrambling, trying to get those bars to be able to make those deliveries. It's as close to a default as we've ever seen. And then you look at the announcements that come out of the European Central Bank, where they said this type of action, the demand for gold on the markets, is actually a threat to the entire system. They're acknowledging it. They acknowledge the fact that physical gold and silver demand is a threat to the system. Well, that's because for the first time ever, people are standing for delivery. This is coming right out of the European Central Bank. And so, yeah, I would say that we're getting closer to that moment than ever. And the value you find, the asymmetrical value, low downside, high upside, in silver rivals anything I've ever seen in finance in almost 4 decades.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.